Last 10 minutes, if you see the Nifty futures and the Bank Nifty futures, the last two bars on the Nifty futures from 11,532 to 11,466, that's about a 70-point shave off that you have seen on the Nifty futures. And if you see the Bank Nifty futures from the high of 29,658 to 29,442, that's a 200-point decline that you have seen. So, Friday factor or whatever you may want to call it, some profit taking has set in. And this last 2 or 3 bars on Nifty futures are actually quite big. They've taken care of that entire move which started from that 130. So, yeah, that's the red candle that we were referring to. Prakash and Mitesh with us for BTST calls. Mitesh, just profit taking you would say, or anything more sinister? And I mean, what's the call on the index and what are your stock calls?
Looks like profit we were taking under. We were close to 11,500. That's been an important level. Extremely overbought also. Weekend also coming in. I think you've highlighted the Friday effect as well. I think all that kind of adds up to some profit booking, and that's what it looks like. The calls which I have right now are a buy on Tata Elxsi or BTST. Tata Elxsi with a stop at 970 for targets of 999. And Adani Ports is a BTST with a stop at 363 for targets of 371.
Okay, Prakash, trades for you?
I have two. Both one is Infosys. Looks like the move is just starting here because down move got arrested. Technically now everyone should give a buy on Infosys on Monday. Looks like 735 is the target I have. Stop below 710. And UPL is another good buy I like. Seen a good up move. The momentum is continuing. Target on the upside 950. I think it's going towards 1000. Stop below 900 should be fine.
Okay. By the way, just look at correction in some of these names. PSU banks, for example, SPI, you're referring to that. That's suddenly seen 2 big red bars. That's down a bit. Also pull out Canara Bank. I mean, nothing alarming. Just to say that, it's a Friday, so some profit taking happening. Of course, very close to technically important mark as well, 11,500. So some profit taking. On the other hand, there are some stocks which are making highs. Metals, for example, Vedanta. Just pull out that stock. That one's at the high point. The 2 cigarette stocks, by the way, ITC, which was sort of seeing a bit of a rally, that rally has fizzled out. And Godfrey Phillips, just look at that chart. That's been the most volatile stock of the day today. That's ITC, rallied, and that entire rally is off. Godfrey Phillips, look at that. It was all over the place. So some profit taking on that.
But Anuj, you largely say it is only profit taking, and you can't blame it, right? Because this is the market that had run up 3.5%, almost near 4% in this week. So it has come in suddenly, but typically that's how it happens. That people do wait for the last half an hour, 40 odd minutes to sell off if they need to, right?
Yeah, the problem is, for example, for someone who bought, say, in last half an hour, just hypothetically.
Assuming that, okay, they can get on the bus now.
Exactly. Assuming you bought in last half an hour on the Nifty, what's your stop loss now? It's straight away at 11,050 or whatever it was from where the rally started, right? Similarly on the Bank Nifty, where do you want to put a stop loss? 1,000 points. And that's where, it's a bit of a tricky point. If you entered late, and if you entered at the start of this rally, you are okay with this move. But to enter now,
on a Friday,
you'll be vulnerable.
In the last half an hour on a Friday, after such a mega rally, people want to then enter, then I don't know, maybe you can do better things with your time.
Reliance, that's also seeing quite a bit of decline. So, anyway, let's see. I mean, let's not forget that we've had a big rally. And even if we close here, it's still going to be a good day. Still 60 points higher on the Nifty, 400 points higher on the Bank Nifty. You still can't complain. We are only looking at the last 15 or 20 minutes.
Absolutely.
Because that's what we tend to do. But overall, it's still been a good week, good day. I mean, everything is good for the bulls.
All right, on that note, let's get you some more market opinion. Men who manage money in this market. We caught up with Vineet Sambre, who heads equities at DSP Investment Managers, got his sense on this market rally and whether this volatility is going to come back once we get the election results out of the way.
See, I think the observation from the past has been election results and election outcome has very shallow shelf life. And eventually people tend to follow the fundamental, people tend to follow the growth which any economy actually projects to show. And my sense is that election will be one event which will be watched very closely. A strong and stable government at the center is very important for the continuity of reforms and continuity of growth. And once that takes place, I think the fundamentals will tend to catch up, and everyone, including the foreign investors and the domestic investors, will pay a lot more attention to that. And on that, my sense is that fundamentally we have been in a low growth phase for many years, and hence once we have stable government at the center, reforms continue, I think that will mean growth continues, and that would basically drive money flow into equities.
Are we likely to go through a bit of a melt-up phase in the market, which makes the market once again a bit top-heavy, driven by this huge FII inflows? I mean, every day we're seeing massive delivery buying in 5 or 6 select names. Can this make market once again a bit narrow and create that risk that we had last year as well?
I think what is happening is that the micro picture is still to emerge stronger, and which is where what you say is that as more and more money gets pumped into the stocks, the stocks tend to go on a slightly higher range of the multiple curve, and that is where the risk keeps getting created, and that is where rise in terms of the volatility is expected. But as these micro trends change, as the earning numbers start supporting the rally, I think that is where we will see some level of consistency. But I think till then, I would sort of concur with your views that the volatility would remain, and the multiple also will be slightly on the higher side.
Would you still bet on autos at all? I don't see them in your list actually.
We have exposure to some of the auto names and also the auto ancillary, and the way we are sort of thinking about the whole auto sector as such is that there is going to be a big regulatory change, and we all are aware about the Euro 6 norms which are going to get implemented in April 2020. So the sense here is that the auto sector will see one demand up move before that gets implemented, because there should be pre-buying before that. Overall, if we look at the long-term trends here, auto sector tends to remain beneficiary of the rising income levels of the consumer, the rising aspiration levels. By and large, our penetration is lower, so the long-term story remains intact. We have a lot of ground to capture here in terms of the low penetration, and hence we continue to hold a positive view.
In your mid-cap fund, you do have a high exposure, Vineet, to the NBFC space, whether it's names like Edelweiss, Manappuram Finance, a couple of others as well. Do you think the worst of the liquidity crisis is now behind us, and what kind of growth targets do you have for this sector?
I don't think that the worst is still behind. We will have to see through the next 4-5 months really before we start commenting on the strength of these NBFCs coming back, or the liquidity challenges abating. But my sense is that we have been selective in terms of owning a few businesses where we felt that the liquidity issue is not going to hurt them as much, where the business metrics tend to remain strong, and these NBFCs, some of them have the pricing power.
So the story is fantastic session, and then the smart money decides to take some of the profit off the table, and that's continuing. So that big dip that you've seen, the names continue to be the same: ITC, Reliance, stocks like SBI as well. A lot of these stocks are well off the peak of the day. Infosys, HDFC, again, profit taking pretty much across the board is what we've seen today. Neeraj Diwan, Director of Quantum Securities, joins in. Neeraj, let me actually start with the biggest stock of them all that's on the move now, and I'm talking Reliance Industries. Fantastic week, good day, great month for the stock so far. It's done about 10-11% in March. Would you still be a buyer of RIL?
Yeah, good afternoon. Yeah, the kind of news flow that is coming around Reliance also, and now with the crude price also going up a bit, I think it definitely makes a case to stay invested in Reliance. Though if one is to invest fresh, I think for that fresh investment, one should wait for volatility, for some dips in the market. You will get opportunities, there will be volatility, there will be dips. So one should not be chasing if you've been sitting outside and today coming into the market and deciding in buying Reliance after this kind of a stellar rally in the last 5-6 months. I think that may not be advisable. But if one is the investor, should hold on, because I think the trend is positive, and the kind of inflow that is coming and the news flow around Reliance, I think there will definitely be upside potential from these levels also.
Okay. By the way, a couple of names look very interesting. Reliance Infrastructure, the entire market seeing some sort of minor profit taking, but in the end, Reliance Infra is the one which is having a big surge. Now, this is in F&O band, so I don't know what happened. All of a sudden, there's a 7% move which happened in Reliance Infra. Is the other ADAG pack also joining in? Let's pull out, say, Capital and also Reliance Power. Okay, that's Reliance Power, not too much of a move there. Reliance Capital, I think Capital is seeing a bit of a move. That's Reliance Capital. But Infra clearly stands out, so big move right now on that stock. Neeraj, hi, good afternoon. The other stock which has really been interesting today is Kotak Mahindra Bank. Your thoughts on whether this is a good zone to accumulate?
Yeah, good afternoon, Anuj. I think Anuj, like I was even discussing with my clients about IndusInd Bank, another private sector banks which was down because of certain reasons. Kotak also because the overhang which was there earlier regarding they'll have to get the stake down. The stock didn't really participate the way HDFC Bank or the other a couple of private sector banks had participated. So I think Kotak and IndusInd Bank are doing that catch-up rally because we've seen FI money coming into, and because FI normally like stocks like IndusInd, Kotak Bank. I think that money is coming into these stocks. And if even if at the current prices, whether it's Kotak Bank or IndusInd Bank, like both of them, even if someone wants to invest for the next 1.5 years, even in current levels they can accumulate, I think they will get a decent return because even the last quarter, even the credit growth that was there in both these was very good. So if they are growing at 20%, I think at this level also it makes sense to invest in them.
Okay, fair enough. Well, on that note, we'll get you some more market opinion. We also got another mutual fund voice to weigh in on the market rally today. Caught up with Nilesh Shah of Kotak Mahindra AMC. This is his view on the market and what mutual funds are doing. He says that don't go by the DI numbers that you see every day. Mutual funds have been buyers in this rally.
Mutual funds are net buyers in this rally. Our inflows have slowed, but it hasn't become negative. And maybe there are other domestic institutional investors who are creating space for divestment by selling in the market. If we look at the FII flows, India was underperforming in the month of Jan and part Feb, and hence some allocations have shifted to us. Second, globally, central bankers have now indicated that interest rate hike cycle is over, and that allocation is shifting to emerging market. Somewhere corrective action by RBI to support growth, and somewhere expectations of a political stability all have come together to create this rally.